This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's exports of fuel products more than doubled in July from a year earlier, data showed on Friday, as refiners maintained high run rates and took advantage of strong export margins. Exports of diesel, the biggest fuel by share of refinery output, totaled 910,000 metric tons, up 153.1% on last year's 360,000 tons. Total diesel exports for the year so far are up 247.1% on last year. Weakness in the country's property and merchandise export sectors, visible in recent data showing sharply contracting new construction starts and sliding sentiment in the manufacturing sector, has weighed on domestic diesel demand. Gasoline exports rose 39.0% to 1.22 million tons from 880,000 tons in July last year.
Oil prices rose about 1% on Friday on signs of slowing U.S. output, but both crude benchmarks also ended their longest weekly rally of 2023 on mounting concerns about global demand growth. West Texas Intermediate, WTI, crude futures gained 86 cents, or 1.1%, to settle at $81.25 a barrel, and Brent crude futures rose 68 cents, or 0.8%, to settle at $84.80 a barrel. Both benchmarks pushed higher on Friday after industry data showed that the U.S. oil and natural gas rig count, an early indicator of future output, fell for the sixth week in a row. A slump in U.S. production could exacerbate an anticipated supply tightness through the rest of this year.
Moving on to the top news in the energy sector.
Spot discounts for Russian crude for September loading have started to deepen as India, a key customer of Moscow, reduces purchases due to high prices and maintenance outages at some refineries, four traders and Indian refinery officials said. India is the top buyer for Russian Urals crude this year, and slowing demand from the world's third-largest importer could push more supply to China instead. Spot discounts for September loading of Russia's flagship-grade Urals for delivery at Indian ports have widened to about $6 per barrel from an average $5 for August, the trade sources said.
Asian refiners are on the hunt for crude oil to replace Kuwaiti supply as the OPEC producer cuts exports by nearly a fifth to feed its huge new refinery, which is driving up prices for other sour crudes and likely to squeeze profit margins. Lower Kuwaiti exports follow cuts from OPEC kingpin Saudi Arabia that have pushed Brent prices close to $90 a barrel and left little wriggle room for Asia's refiners, reliant on the Middle East for more than two-thirds of crude imports. Chinese refiners, which have invested heavily in new plants designed to process sour oil, are especially exposed. Next, we have the top news in metal markets. Gold was little changed on Friday, but bullion was bound for its third straight weekly dip as recent sound U.S. economic data raised bets for interest rates staying higher for longer. Spot gold was steady at $1,887.79 per ounce by 2:22 p.m. Eastern Time, 18:22 GMT, down 1.4% for the week so far. U.S. gold futures settled 0.1% higher at $1,916.50. Limiting losses for the day, the dollar was down 0.2%, making gold cheaper for holders of other currencies.
China's aluminium imports jumped 20.1% in July from a year earlier, customs data showed on Friday, due to low stocks and expectations for stronger demand in the autumn season. China, which is the world's biggest consumer of aluminium and also the biggest producer, imported 231,452 metric tons of unwrought aluminium and products including primary metal and unwrought, alloyed aluminium last month, according to data from the General Administration of Customs. That marked a 9.6% increase compared with June imports of 211,235 metric tons. The rise in imports came amid tight stocks of the light metal.
We will now look at the top news in the agricultural sector.
China's aluminium imports jumped 20.1% in July from a year earlier, customs data showed on Friday, due to low stocks and expectations for stronger demand in the autumn season. China, which is the world's biggest consumer of aluminium and also the biggest producer, imported 231,452 metric tons of unwrought aluminium and products including primary metal and unwrought, alloyed aluminium last month, according to data from the General Administration of Customs. That marked a 9.6% increase compared with June imports of 211,235 metric tons. The rise in imports came amid tight stocks of the light metal. That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.